course, is a very friendly legal company, Russell Cook. They've got a good package for early stage startups. You can all find it on Dreamstick platform. So I'm going to hand over to Paul, who is the founder of Dreamstick, and he's going to lead the panel. And we've got very interesting panelists tonight because we're going to have different opinions from a very early stage fintech startup, a bit more established fintech startup, and to venture capitals who are also interested and done a lot in financial technology sector. So handing over to Paul.
Yeah. So Damien, I'm a partner of episode 1, and we are a late seed, early Series A investor, so trying to do £500,000 to £2 million tickets. We're very generalist, so we haven't actually done a fintech investment, and I'll explain some of the reasons why we sometimes struggle with fintech, I'm sure, as the evening goes on. There's 3 of us. We've got a £37.5 million fund, 13 companies in the portfolio, and looking to build a portfolio in the current fund of about 25 companies.
Sorry, yes, hello. William Lorenz. I'm a second-time fintech founder, the first one back in 2002, so I have a very different perspective on what was the fintech scene, ease of fundraising and so on then. That company was called Exaris. It was a prepaid Visa and MasterCard shop. That's still there, it's still private, took about 7 million equity and some venture debt during its time, gave 10 times exit to its very early angel investors. So I'm kind of the guy who did it before. Time to move on after a certain point and go join Leslie, who's the inventor of Quanji, which started up probably in early 2013. Quanji is a foreign exchange comparison platform for businesses with all kinds of bells and whistles I won't get into, but come talk to our team, Petter and Nathan over here later on if you want to hear any more.
So I'm Nick Brisbourne, a partner at Forward Partners, and so we're an investor a bit like episode 1, but we skew a little bit earlier stage, and so we see ourselves as helping companies anywhere on the journey from raw idea through to Series A. And we look at that as the path to success, the path forward, and in order to help entrepreneurs get to success as fast as they can, we've put together what is quite really a different package to most other investors. So it's a combination of cash investment. We've got a team, startup team of people that are there to help with design, with development, with marketing. Find those best customers, choose the right product, anything really that the entrepreneur chooses to take from us. And obvious places in the bundle as well. So we've got, I think, I know 28 companies in the portfolio right now, and we're entirely focused within e-commerce, but we define that quite broadly to include anything consumer focused that is selling something to consumers. And so in the fintech space, that could be current accounts, it could be insurance, could be a loan, could be an investment in Zopa, that sort of thing.
Okay, I'm James Tuckett, I'm the Managing Director of Investor. I'm a first-time fintech founder, and the company is a crowdfunding supermarket, whereas a typical crowdfunding site is interested in finding individuals or businesses who need money, and also at the same time sourcing those people who are going to ultimately invest and lend. We're only interested in the investor and lending side of the equation. Investors and lenders can use our site to access the entire crowdfunding market from a single platform. We describe ourselves as sort of Hargreaves Lansdown and roots in crowdfunding.
Great, thanks guys. I think we're all noticing that fintech is a really hot sector in the London market, particularly at the moment. You can't really pick up a newspaper or read a blog without seeing stuff about fintech. So my question is, how different is investing in fintech companies to any other sector? So that's really to Damien, and maybe Nick first and then Damien.
So I think it hugely depends which parts of fintech you're looking at. So in a previous life, or roughly I think back in 2000 actually, I invested in a software company selling into investment banks. So it was middleware software for banks. And and to play in that sort of world, you need to have a very deep understanding of of banks, and the arcane systems, and equities, fixed income, and so on. And it requires this kind of deep specialist knowledge. And so if you're in the software space selling effectively back office software, then that's really a very specialised area. Payment software is similar. If you're doing more consumer-oriented stuff as we are now, then I think it's more similar to other areas of investment. The fundamental disciplines of understanding whether something's going to appeal to consumers, how you're going to market it. All of those things are similar to the other e-commerce businesses that we look at.
Yeah, I mean, I'd echo that. The one, not caveat, but thing I would add to it is, because it's such a huge industry, because the prize is so great for success, pretty much wherever you look in fintech, it's incredibly busy. So as a seed investor, we're trying to find 6-7 opportunities to invest in a year, and we know they're not all going to be fantastically successful, but we want to be reasonably confident when we're investing that the business that we're investing has a real chance of cutting through the competition. And an awful lot of the fintech things that we've seen 4 or 5 very similar looking businesses, often within the last 4 or 5 weeks. And while we definitely don't think we're smart enough to be able to pick one of those 5, let alone one of the 30 or 40 other companies that we've seen that are, all of whom are attacking similar sorts of spaces. So it does that, as a seed investor, that makes it very difficult. And the other difference, I think, just echoing what Nick said, if you're looking at enterprise sale, if you're selling fintech to an enterprise, typically you're selling it to a huge institution. So the size of the prize, again, is enormous, but the sales cycle surrounding that is pretty long. And as a seed investor, how much money are you going to want to allocate to a business where the sales cycle may be 18 months before you know whether that investment's going to generate a return even on that first initial customer, rather than whether it can be a business that's going to be worth 100, 200, 300, 400, 500 million pounds at some point in the future.
Sorry, yes, I had a comment on this from the other side. So just to illustrate this, we recently sent out a kind of taster to get investors re-engaged with us ahead of a funding round. And we did it in terms of our Spaces FX by talking about all the hype in the industry. The TransferWises, famous name of course, others of similar ilk, and saying we're different, we're not this because. But in a couple of cases that backfired because of the similar thing to what you're saying, where investors said, look, we really are, because of all that hype that you identified, we're stepping back from all of this unless you've got very, very serious, revenue traction, 100k up, even in the kind of A to B. So it's kind of double-edged sword of trying to ride the hype wave and, it causing...
Do you feel it's getting overhyped, do you, at the moment, slightly?
Yes, it can be useful if we talked about somebody who had not much of a fintech business and got a whopping valuation on it, so you can get lucky, but of course it can bite you as well.
I mean, I met the founder of blockchain yesterday, and I think they were the biggest ever first round funding of 30 million, so that's quite a big first round funding. I think we're coming to the startup really, so I get the feeling that because with fintech, the investors are often the same people, so they actually understand what they're investing in. Do you find that any easier when you talk to investors, or do you feel that's not the case? Do they understand what you're trying to do?
I think most of the investors we've spoken to would describe themselves as smart money. Some not so much, but certainly there are quite a lot of smart investors, angel investors in particular, out there who have a background in fintech. Whether or not that's always helpful, because sometimes they, I think, believe they can run your business better than you can, so it can be frustrating. But I would say there is especially in our experience in London, there is a reluctance among some of the investors to take a view on some of these businesses and realise that at the moment there is a revolution going on in fintech. Hype is hype, but hype's there for a reason. There are big opportunities to be had, and although I hear what they've been saying, 400 or 500 million valuation companies, but I think there's the potential for some even much bigger companies than that still. And in my experience, UK investors do not, even the fintech ones do not realise the potential opportunity that perhaps is here in London at the moment, whereas US investors do, and they will take a view on companies that isn't what we're getting here in the UK. So it's a tough environment.
I think in some ways it's sometimes the same thing. I think Nick said you're looking at consumer fintech, which is disrupting the industry because it's going around the back and doing it, against the banks effectively. Whereas I think it was Damien who probably mentioned more working with the banks with some of the transactional systems and things like that. So it would be good to get opinions, around which subsectors you think are kind of hot, and also whether you think there is a differentiation between those two different sectors. Anybody want to answer that one?
I'll do the first half. I've got a view on the second. I think an interesting space is the whole peer-to-peer. I'm going to call it a thing. But there's a lot of pressure on banks to, or people within banks to ensure that their individual customer relationships are profitable. And the fact is that because of all the infrastructure and the cost and the overhead and all that sort of stuff, a lot of these big institutions find it very difficult to service small and medium-sized enterprise. And then because they're also extraordinarily risk-averse at the moment, and I don't think that'll change anytime soon, they don't want to lend to those guys, so they find it very difficult to service them. They find it very difficult to lend to them. And actually, we've seen instances where big banks are starting to refer the SME clients who they're happy to do money transfer business for because that's very profitable, but they don't want to lend them money, they don't want to finance invoices, they don't want to do that. So there's quite a lot of that stuff going on as well, which is, I find very interesting that it's effectively banks inviting startups to start nibbling away at what ought to be their core business. It's fascinating.
Anybody else like to comment on this?
No.
Yeah, I've got a few comments to make. Yeah, as Amy said, the interesting thing is that the banks have shifted away from global banking, investment banking, and refocused on retail and commercial banking. And the irony here is at the same time as they're doing that, there's fintech companies emerging all over the place that are nibbling away at every corner of their business. There's a very good picture going around the Twitter sphere at the moment, which has the Wells Fargo homepage, and off the side of it are hundreds of different fintech companies that are doing every little bit of bit that Wells Fargo are currently doing. It's the whole jack of all trades. I think banking model has got to change. I'm not an evangelical. I don't believe that it's going to be fintech companies or destroying all banks. I'm sure there'll be a combination of the two. But as you mentioned before, one of the panel mentioned before, the opportunities for fintech companies to be acquired by banks, as they cannot or will not at the moment because they are so scared of all the sort of mis-selling fiascos and all that kind of stuff. They will be looking to acquire these companies in the near future, so there's a lot of opportunity to get a fairly quick exit. It's not something we're personally interested in, but I think it's a good thing to know if you're a new fintech company.
Or even a slow exit for a lot.
Yeah.
Okay, so moving on a bit. William, who you mentioned foolishly that you've done this before, so asking the obvious question now, what difference have you noticed this time around? You funded, when was it you funded the first startup?
So the first one had its angel money in August 2002, and then had its ups and downs on valuation and rounds.
I guess it wasn't called Fintech in those days even.
No such thing. And then of course, that whole story, which is obvious now to us now, is the whole kind of suite of software as a service providers to allow, and cloud hosting or whatever it might be to get you off the ground just didn't exist. So you weren't buying your own rack space in Rackspace or others. I'm afraid we use someone else. So much more kind of construct from scratch. But the commonalities are, and I'm afraid this may not be a positive message for everybody, but it's not what you know, it's who you know. It was in both cases it was people we'd had in our payment network, sorry, in our business network and had done activity with before who'd fund you again. So, oh yeah, we know this guy will be anchor angel for the first ever seed round in both cases. So that's common. In terms of the modern environment, yeah, this issue of noise is an interesting one. And so you've really got to have a story of how you fit around others in your sector. Our space, FX, effectively is horribly busy. Lots of already very highly valued companies. We are doing something different, but explaining that coherently has become absolutely imperative, more than it ever was before. And a year ago, we hadn't got our head around it, and so it was falling flat as a pancake.
Fintech accelerators in London at the moment, and I think you had the pleasure of being on the Startup Bootcamp Fintech Accelerator. What's that experience like?
So if you're a really small business in a massive industry, and there are likely to be players, whether it's in the invoice financing business where you've got Market Invoice and people like Bibby who are the incumbents, whether it's transferring money where you've got TransferWise and a number of other sort of pretty well-funded businesses. When you're coming to us and asking us for half a million quid when you're doing, maybe a couple of grand of revenue a month, we've actually got a term sheet out to a fintech business at the moment. So maybe in a month's time we will have made a fintech investment. But what we've been looking for is somebody who can come in and say, I know there's all these guys doing this, but it's the entrepreneur's role to tell us, to convince us that they've got an unfair advantage. And that unfair advantage may be in the experience of the team, it may be because they've developed a relationship with an incumbent, it may be because they've got bloody lucky and bumped into somebody or something that has given them the first, 5 grand, 10 grand of revenue a month. But whatever it is, we haven't found that. The other thing I would say is there's lots of talk at the moment about whether there's a bubble in the early in VC generally. Generally, I don't think there is, but we see higher valuations in fintech generally per sort of pound of revenue, if you like, than in any other space. And I suspect that is not unrelated to the fact that within a mile of here there are a bucket load of people who've made millions and millions of pounds in hedge funds, fund management, banking, whatever it is, who have an understanding of fintech, think they have an understanding of fintech, have an empathy for fintech, who are pretty valuation agnostic. And what happens is they meet a team, the team says, as you would do if you're an entrepreneur, I want 6 million quid pre, even though I haven't got any revenue, and they go, because they've actually got so much money it almost doesn't matter, yeah, I'll do 250 at 6 million pre. And as a seed investor, where we're looking at fintech and consumer and, everything, we've got other things that we think offer us better opportunities to make 30 times our money on companies, and so we haven't found that. We haven't found that compelling entrepreneur yet. Hopefully we will at some point, probably tomorrow.
You can either see that as a great opportunity for that to become a trend and lots of market to take, or you can see the fact that there's been people trying to disrupt that and take business away from the banks for 30 years, and they've just scratched the surface. So is it really a trend, or is it a blip on the backside of the banks? I still can't quite decide, frankly, either way.
But any trends that you have seen? I mean, there's certain things that don't even come from the existing banking model. Things like peer-to-peer and crowdfunding, I guess. Maybe James.
Also, I'm very biased. I look through a lens that is the crowdfunding lens, and I'm sure you read all about this stuff all the time. So perhaps I'll talk about something slightly different and come back to crowdfunding in a minute. I mean, one of the things that hasn't been looked at, I think, is pensions as well, same with insurance. These are like complicated areas that people tend to be clear of, but if there's some people coming out of those...
Most of us are still trying to work that out. But I will ask, because you must have been looking at it as VCs, whether or not Bitcoin and blockchain are areas that you're going to look at investing in the future.
So for us, for sure. So we're focused on that strategy to invest in e-commerce ecosystems, as I said earlier. So right now it will be off strategy for us, but I imagine we'll do kind of 1 or 2 off strategy deals in the next couple of years, and one of those might well be a blockchain or a Bitcoin deal. There was one company that came to us with the idea of replacing the entire accounting system with effectively blockchain verified transactions. And if you do that, you build that into your invoicing process and everything, then every transaction is verified as you go through the year, and your annual audit becomes the press of a button. And so, that's obviously intensive structure for the company industry. That's one example. Things like that, I think, I don't know whether that actually works or not, but things like that, some things like that will work, and that's very exciting. David?
In the next 18 months, I think it's very unlikely. So I think adoption of the whole Bitcoin sort of ecosystem will be slower than our funding kind of horizons, i.e. sort of 12-18 months after funding will allow us to be sufficiently confident that there'll be a sort of a business in that kind of timescale. I don't think it's any accident that a lot of these things are being funded in the US, where funds are bigger, people can invest bigger checks and therefore give their companies longer.
Maybe 2 more questions. Yes?
Yes. I've got one question. First, Damien, I think we met in Capital Stage in January and December last year, so I'm really happy to meet many of you and to introduce you as Fintech Circle. We have got a European angel network focused on Fintech. So in order to raise money via angels, focused on Fintech investors, that's what we are doing. We are focused on the Fintech Circle. And we have looked in detail on InvestUp, and so we know, what a great company InvestUp is. I've also signed up for it as a user. So just want to say that the user onboarding process worked very well the last few weeks. So really recommend anybody to do that. And one question I had for James was, because you were very successful in getting PR. I know lots of fintech companies try to get good relations with the press. How do you do that? What advice can you give to fintech firms?
Finance, and specifically journalists who have to report on this stuff, are used to talking to people who are, how do I describe it, not particularly animated and don't really talk like normal human beings. And I think that can get tiresome if you're doing them on a daily basis. So if you meet a journalist and just behave maybe a little bit eccentrically and just talk to them like a normal person, they'll really, really appreciate it a lot. That's probably the #1 reason why we got that. I hope because also the proposition is very strong, but also I think for behaving like an idiot.
Does anybody want to finish off with a final question? Maybe not. Yes.
So, say you were going to make one of your 24 investments that year, and there was a company, a startup that was sort of on the fence. You had to decide whether to invest or not. Do you have a process where you had maybe 3 questions that you had to ask to make that decision? And what would those 3 questions be?
So, if you're on the fence, the answer is nearly always no.
Yeah.
Because you very rarely get more enthusiastic about a company after the first board meeting. So if you've got any doubt, so as a firm, we sit with the 3 partners sit together every Monday morning, and clearly we say no 994 times out of 1,000 on an annual basis. So to be one of the 6 that you are saying yes to, nobody. There's got to be somebody who is so far over the other side of the fence, going, looking behind me, going, "Where are you guys? Get off the fence." If you're on the fence about it, the answer is no.
I think, to be cheeky though, there is an investor herd mentality. I'm sure you resist that, but I'm sure you resist that.
He's agreeing.
But easier said than done. And usually it's down the road at Series B or beyond. But I've definitely seen you know, people bidding off against each other, trying to get larger chunks. If you ever get to that competitive environment, that will swing people over who had initially been saying no to be saying yes. So very hard to do. I haven't done it personally.
Interesting. Anybody else want to comment on that? No, I don't think so. So, James?
No, it's all right, it's nothing that special.
So I'd like to thank Damien, William, Nick and James for being a great panel. A round of applause, please. Oh yes, and Nick would just like to say a few words.
Awfully formal. So we run a monthly office hours program, and so if you'd like to come and have a 15-minute chat with me or one of my partners, then please you can get in touch via our website. So the next one coming up towards the end of May. Okay, thanks a lot.
Well, thanks everyone, and I would like to say or suggest that you check out our Startup Mini Expo. You guys are gonna be here, so do network with them, grab a drink, and just ask what they're doing and ask your questions. They're all fintech, early stage. And I would like to say thanks again to Rackspace and Russell Cook for providing us with drinks and help us to make this whole event happen. Thank you guys, you're going to be around, so if you've got questions to Rackspace, do ask them about hosting. And a couple of more things, so I don't forget. So we've got, next week we've got Dreamstick Academy, a whole day of workshops on Tuesday on the 3rd